Good evening. It's Vijay here. Today is Sunday, the 19th January 2025. We just have 10 days before the budget, and there is a lot of scaremongering going on. So, in this weekend's market mirror, I would like to address the scaremongers' worries or woes, or let's say fears, where people are talking about stocks, Indian stocks, global stocks. People are talking about interest rates. People are talking about oil. People are talking about rupee and many other things. So we'll have to step back. In this episode, I would like to step back and show you through data as to why we should not be the scaremongers. Sure, there are problems all over the globe, in India too. Corporate results are not great. But should we be scared and fall a prey to these scaremongers is what is the purpose of this episode. Usually, the retail investors or the uninitiated investors, I would say, just flee the markets when big guys come on TV and other media and talk about something bad is going to happen because of various things. So, what happens at that point of time is that you see, the people begin to believe that what the so called experts are talking about is the thing which is going to happen. Now, here is an example. I am not naming who this gentleman is. He claims he's got experience in technical analysis. So he has shown a pattern where he has compared 2008, 2007, 2008 vis-a-vis what is happening now. So he says between 2006 to 2008, the market went up and then it made what is called a bearish piercing or a bearish engulfing pattern in January of 2008, and then it started falling. This is a monthly chart. I think that is what he has given. No, sorry, this is a quarterly chart. So after that, 4 quarters, it fell down. So now you come to this tweezer top is what is the technical definition of the candlesticks. And he is saying 2 quarters were already down, and therefore we will replicate what happened in 2008. Now, if you look at it, some things may look similar, but what was the reason for the price action is what is important. I do not know whether this gentleman was there in 2006 to 2008, but having been very active during that time, much more active than what now, I am very confident that this is no reflection or no now nothing equals as to what happened then. Then we had a 4 year bull run where things went up in multiples. Is for instance, Sensex went up from 3,000 to 21,000 7 times in 4 years. Here we are talking of Sensex. I think if you take Nifty went up from 7,500 to 26,000, about less than 4 times in 4 years. Whereas that time the Nifty went up from about 900 to 6,000. That is about, you can say, 7 times, close to some, because it was below, somewhere below 900 to above 6,000. So 7 times it had gone up. Sensex had gone up 3 to 21. Here, Nifty and Sensex both have gone up approximately 3 times. Not even three, yeah, approximately 3 times. That is point number one. Point number two was the kind of growth which was there during that period of time made people extraordinarily bullish. Here, we are having the market going by, let's say 2 steps forward, 1 step backward. And then you do not have euphoria lasting for more than a few months here. It depends on sectors. Some sectors had euphoria for about 1 year, 1.5 years, and then it goes to another sector, and that gets a euphoria for another 18 months, and then the first sector would have already fallen. That we have observed. This market fall in the last 4 months, if you take, or 4.5 months, has been very steady, full of doubts. At that point of time, even when the market topped out in January, till around September end, till September, the market men were very, very bullish. Here, everyone has turned bearish. So this is no, reflection of what happened at that point of time. So that is the first thing you'll have to understand. The second thing which you need to understand is here. Let's take the next one, the US dollar and the rupee. So if you look at this, people are talking about, rupee crashing. Now I have got data here right from 1973 till now. This is a annual 12-month data. If you see now, if going up means that the rupee is becoming more and more cheap vis-a-vis dollar. Okay, so if you look at that, or if you take this another way of doing this is by the print where they talk of the rupee, how much 1 rupee could buy, what kind of $1 on 1 rupee. That is a variation they have done. So it took rupee, how much rupee it takes to buy $1. So at one point of time, it took only 20 rupees to buy $1. That was somewhere in 1980s. Then you see the steady downtrend is there, which is exactly opposite of what I mentioned, that other graph. So yeah, I think if you want to have more information about this, this is a very nice video by Shekhar Gupta on print. It has come recently. You can have a look at it. He is explained in detail. But suffice to say, what I am trying to get at is the fall, if anything, has not been, like some sudden crash or something which people are talking and doomsday. We have seen, you see this rally here, that means the fall here, and then see this. So even in 2021, 22, we had a big fall in the rupee. So what we are seeing now is not something which we should get scared of. We have seen rupee has fallen 27% in 3 months, which I keep repeating. Typically, it will fall about 3 to 4%. It depends. Nowadays, it falls about 4% per year. So we have fallen 4% in 2 years' time. So we can still fall another 4% this year and still be within the long-term trend. So I do not know who are these guys. What are they smoking when they talk about rupee going to crash? So we have seen an uptrend in rupee, which means the weakening of the rupee or the strengthening of the dollar, as the case may be, and it has been steady since 1985. See, here in the earlier years, it was tightly controlled, and there were not much of movement because government had its say in everything. Once they opened up in 91 here, somewhere around here you can say, and it has been going up steadily because the government is not putting that much, RBI is not putting too much pressure. Unfortunately for us, we had a RBI which in the last 3 years has tried to show its machoism by trying to hold the rupee for no reason. When globally rupee, all the other currencies are falling, we have fallen the least. And what for? It is not that our economy is doing better than any of those. But you see, that is the problem. We are so much, what shall I say, wrongly nationalistic. And then we end up, worrying now. Now take crude oil. People talk crude oil will kill us. You see this? If you see in 2023, crude had reached already 100, and if you see in 2022, crude had got to 123. Today, we are shivering in our pants at $80. If you look at in the last 3-4 years, crude has maintained this one somewhere between 70 to 95. We are at 80. We are actually at the mid end of the range. Just see this. Please note this. From 2022, when it was around 70, it went up close to 140. So leave that. I'm saying, if you just simply take on a weekly basis, 123, 124 was the high. It again hit a high 2 months later. There was a lot of panic at that point of time. People forget it. But I was very confident. And if you go back to my tweets 2 years ago, you will notice that I was trying to calm the market because those kind of spikes will not last because there is no such demand. Today, again, we have come to a situation where people are panicking, whereas Trump is saying drill, baby, drill, which means he's going to push more and more oil into the system, and therefore the oil prices will not go up beyond a particular level. Now there is another fear, which is Russia has been sanctioned, so therefore India and China will suffer the most. Now for that, I recommend you to listen to this wonderful report called the Core Report, where decoding the sanctions, bombshell on Russian oil and impact on India. Vandana Hari is a very popular analyst on commodities. I fully endorse her views because that is what I have understood and read from various other sources. See, Russia is supposed to supply oil to the world not more than $60. Now, what will happen is that if they are sanctioned, if they want to supply to anybody, they can supply only at 60. Now the oil is at 80. So if we are the biggest buyers, then what will we do? We'll say you give it to us at 60 or below 60. So that is what is likely to happen. So therefore, there is nothing to fear that Russia is sanctioned and therefore India will struggle. Actually, India will end up benefiting because we are now assured that we will get oil, which is 33% of our requirements are coming from Russia at $60. Let's say even oil goes up to $90, we are still okay because 1/3 of our supply today is coming from Russia. So we can increase. It is not that we cannot increase. So Russia will be forced to supply to us at $60. So I do not know from where these kind of people come with this, thing about things are bad and they can get worse. Now let's finally talk about, I'll just share this with, yeah. Okay. Now let's go to the equity market. Now, if you take equity market, if you look at it in terms of, what was happening about a few months ago was that Trump is going to come down. Trump is going to come. So therefore, there will be chaos in the market. So what happened to the Dow Jones? See, this chaos was somewhere here. They said from August onwards, Trump may be winning. September, it went up, made a new high, then it fell down. This weekly chart, and again it started going up. If you take it the daily chart, it looks much more interesting. You see this? From August, it has been continuously going up. Of course, you have ups and downs. Markets don't go one direction. You take Nasdaq, continuously going up. S&P on uptrend. The Russell 2000, the small cap, good uptrend. Nikkei is also an uptrend. Hang Seng, uptrend. Of course, Hang Seng is a problematic this one because of the China factor. Take European markets. Yesterday it hit a new high. DAX, CAC, almost in an uptrend. This UK hit an all-time high. So there was this narrative, fear created by people saying Trump will come and the entire global markets will crash. If all you need to do is go back about 3 months or 6 months before and see what the analysts were talking. All of them were clear that you will have a very, very big crash. So that is exactly, what fear we should get out of and have hope. People say hope is not a strategy, but neither is fear. But people say fear, you should sell it off. So now we come to India and Indian stocks. Now, if you look at Indian stocks, they seem to be on a downtrend. That is, downtrend has started sometime in, in end of September, and it has been coming down. That is what the fear is. Now, we have seen such downtrends here also. You see this? In 2023, you see this? In 2023, also you saw a downtrend from November 2022 here, and you see continuously downtrend, lower top, lower bottom. Let us say if you had been afraid, then you would have sold at the worst time in March, April, and then what happened? Then it took off. Similarly, you saw one downtrend even in 2021, 22. People said it is okay, bear market has started, now it will go to 12,000. So then what happened? Even in terms of short term, if you see in short term, see this, I'll show you in March, for instance, which I showed some time ago. You see in March, there was a downtrend. If you go back and see in terms of the indices, different indices, especially in this micro cap and small cap, in March, there was a big fall. You see this fall? It fell 16%, whereas recent micro cap fall is only 11%. If you take small cap, in March, it was 13.5%. Here, it was only 12.5%. So when it falls 10%, people think that's over. But the same thing they felt in March of this year. But then it went on to hit new highs. This is the small cap. Same thing mid cap. You see? Mid cap also. It fell 8.3. This time it's fallen more, but it has bounced back. So it's not much of a difference between 8.3 and 10.5. I know. So on this one, it looks big, but you see it has bounced back. It bounces back always. So take this S&P CNX 500, 5% fall. People started, shouting that everything is bad. This fallen 7%, but has again bounced back 2%. So you should have an understanding and a perspective of what actually has happened in the recent past. I'm not talking of 2008 or 1992 or 2000 or any other time. I'm talking of just 2024 or 2023 and 2022. Last 3-4 years, when all of us have been in the market in bigger numbers after COVID, the market has expanded. So all of these guys have gone through this pain already. So this pain is no different from what we underwent in 2024 March, or what we went in 2022 or 2021. So to say that retail investors don't know, they have not seen a fall like this, so therefore they have to be very careful, they should sell and go away, is the worst advice anybody can give. And it is faulty advice. It is not the worst alone. It is not having any basis. If you see in the past, every time such a fall has happened, it has bounced back. And why should it bounce back now? If you say it is corporate results are bad, not all corporate results are bad. You look at Reliance, they have done well. You look at Kotak Mahindra, they have done much better than expectations. So now everybody knows that microfinance problems are there. So they have tightened the belt, and therefore things only can get better. And most important is the budget. Now, budget, people say, no, budget is not important. Many things can be done outside the budget. But that is not true, because budget gives you a macro indication of what the government wants to do. Like last year, they said 11,11,000 crores they're going to put in infra. That is a very big number. That also shows you the direction where the government wants to go. Recently, the defense minister said this 2025 will be the year of defense budget. So those are cues which one has to pick up. And most importantly, the government which was thinking that, everything is okay, sab changa si, everything is okay, they have been rudely awakened by the GDP numbers, corporate numbers, and inflation numbers. So you will see that is common sense. There's nothing great about it. When you see all around you, things are not doing well, and you thought they were doing well, then only, if not for anything, for your own ego, you'll try to set it right. After all, we want to become Vishwaguru. If you want to become Vishwaguru, then we should set these things right. So in my opinion, this budget will be the most important budget we have seen in the last 2 decades. Because every time in the budget, one could have some expectation. This budget is a time where everybody has got negative expectations. Everybody's scared. And people are getting scared into going into the budget. And I've seen when people got scared going into the budget, like for instance, 2021, the market took off after the budget. What for? Nothing new came out of the budget in 2021, but nothing bad came out of it. Here, I expect something good to come out of it, because I think the government realizes what we are hearing from the government sources or people who are in the Prime Minister's Economic Advisory Council. All of them are clear that the government is up to it, and government has been making the relevant noises. That is why the RBI governor did not get an extension, because the path he was taking us on was a very dangerous path. The new governor, I assume, because the way his actions are, that he will take us on a different path. Coming to FII. Now, why are FIIs selling in such plenty? Because they know the rupee is artificially held. If it is rupee is artificially held at higher level, they can sell at this level and can buy back when the rupee weakens, because they'll get more shares for the same dollar. Now, if they come to know that rupee will be allowed to freely float, so maybe it will go another $1, $2. It may go to 88, 90. Somewhere it will find its true value. And at that point of time, there will be a rush to come into buying. That is common sense. I do not know when that will happen, but I am very sure it will happen if you allow the rupee to float relatively free, which this governor is doing. So therefore, what I'm trying to get at from here is, please do not believe these fear mongers. They do not have any basis in history. They have not experienced, most of them have not experienced. Even those guys who have experienced, I'm seeing them spouting rubbish data. Sorry to say rubbish. And when they spout such rubbish data, you feel that they're big, they have knowledge, they manage large amount of funds, and they've got experience. All of it is to be checked by data. Data says what we are today is not something new. We have seen this just in March of 2024. We have seen it in June, between November of 2022 and March of 2023. We have seen it between January of 22, October of 2021 to June of 2022. Kindly go and check the charts, and then you will realize what I'm trying to say. At the end of the day, I would suggest that you should forget these guys, check them, cross check, fact check, and you'll be shocked that these guys are spouting rubbish. I continue to be bullish. I will continue to be bullish till February 1st. If against all my hope and logic, if the budget is bad, then we'll have to review our bullish stance. But I don't see any reason for me to review my bullish stance as we go into the budget week. Whatever you do, I hope you are successful. Thank you for joining me. Have a nice weekend.